Hey Harvesters, and welcome to the channel. My name is Matt. In today's video, I'm going to be going over the trades I execute for May 19th. We're going to be talking about the covered calls, the cash secured puts, and everything in between. If what I said to you is a foreign language, do not be dismayed, for I am with you. We're going to take care of you here. We're going to teach you guys, and we're going to help you understand it. Also, we're going to talk about what trades I executed on May 16th. We're going to do a backfill of some of the information. Didn't make a video. I was traveling out to Chicago, where I'm originally from, to spend time with my family. My dad was retiring. He hit 65 years old, and that is enough for him. For anyone that is a new viewer to my channel, the whole point to my Robinhood account is income generation. I'm not into that whole like dividend growth investing that's going to take you 1,000 years for you to actually make an income. I'm trying to find a mechanism that's a little bit faster, and I think the safest, most effective way is running your own covered calls and cash secured puts. And I'm going to do my best to teach you guys how to do that so we can all make money together. If that's something you're interested, go ahead and smash that subscribe button, like my videos, and then let's go forth on this journey together. For anyone that is a returning subscriber, you guys know me. The first thing I'm going to talk about is my account value, and it's currently at $97,253.32. That's more so just a transparency aspect of running this channel. I want to show you guys I'm actually running these options. I'm trying to grow this account, and I'm in the trenches with you guys. So let's go over the spreadsheet and let's start talking about the numbers for May 16th and then May 19th. All right, guys, I'm going to talk about what I did for May 16th and May 19th at a hierarchy view, and then we're going to dive into it in a moment here. So for May 16th, I ran 3 different options plays. 2 of them were covered calls. 1 was a cash secured put. So basically for a covered call, you have to own the shares to run that specific option strategy. And then for a cash secured put, the only thing you needed to run this option is collateral, and collateral in regard to options trading is either margin or cash. So the first thing I did for May 16th is I actually had to buy 100 shares of SPY, because 100 shares of SPY equals 1 options contract in the options world. So I bought 100 shares of SPY at the 590.40. That means I needed $59,040 to buy that 100 shares. And in that day, I made about $84 choosing this 592 strike price. And interesting enough, the trading at close was $594.20. So theoretically, this 100 shares of SPY that I chose a 592 strike price was supposed to be assigned at the end of the trading day. However, Robinhood came up with like some weird void. It basically voided that assignment and says options wasn't exercised, so your assignment was voided. So that means I got to just keep my 100 shares, even though it went past my strike price. So it was kind of cool. So basically for May 19th, I didn't have to buy 100 shares of SPY in the morning. So I was able just to run a covered call immediately. But the second thing I did for May 16th was a cash secured put. The way a cash secured put works is an investor is going to pay you upfront premium to basically offload their shares that they own if the market goes down to a certain threshold. So the way this works is I made about $88, and when the market opened, I think it was at like 520, and I chose a strike price of the 517. And at the end of the trading day, the market didn't go anywhere near 517. So I basically got to keep this $88 of premium. And I was able to, at the end of the trading day, my collateral was freed up, and then I could rinse and repeat this the next day. I also own about 100 shares of IWM. IWM is the Russell 2000, which is small caps for the stock market. So I bought those at the 208.51, and I made about $39 of premium. I chose a strike price of the 209, didn't hit. Well, actually, the assignment was supposed to hit, and I was supposed to get my shares assigned away from me. However, the same kind of excuse where the options wasn't exercised, so the assignment was voided. So then, again, I got to keep 100 shares of IWM for Monday, so I didn't have to buy back in. So all in all, I will say this: when I made the post on May 16th, when I was flying out from the airport, I had some appreciation on there because I didn't think that these options assignment were going to get voided. So I actually had to update my post on Friday. Basically, I took away the appreciation gain. So the only thing I made for Friday was $211 of premium. And what I do with the options premium that I make from running options is I just buy more shares of SPY. Every time I make money with premium, I just buy more shares of SPY. Eventually, I'll get another 100 shares. And then with another 100 shares of SPY, then I'm going to run more covered calls and make more income. And then it's going to be kind of like a snowball. The more money I have making more money, that means the more money I'm going to be continuing to make. So that's kind of like the dream, guys. And do I have a specific number I'm trying to reach? No, but I think ideally if I can consistently make about $10,000 a month running my own options very safely, I think that would be enough for me to quit my job. That's kind of where I'm at. $10,000 would be enough for, paying the house, any extra bills, and yeah. Either way, that's kind of the dream right now. So looking at May 19th. All right, guys, for May 19th, the first thing I did is I ran a covered call against 100 shares of SPY that I still had from May 16th. I made up $82 choosing the 593 strike price. The SPY closed May 19th at the 594.85. And because it was higher than my strike price of 593, my shares were assigned away from me. So I made $82 of premium. And then from that appreciation of that $59,040 and then selling at $59,300, I made $260 of appreciation. So this brings up my next point. For whenever I make premium, I buy more shares of SPY. Whenever I make money off of appreciation, I just leave it as cash in the account, because if I continue to appreciate the account and this SPY continues to get more and more expensive, me just leaving this appreciation gain as cash is the best way, so that I can continue buying the contracts of the shares of SPY, so I can continue running the strategy without having to use margin. And the next thing I did is I ran a cash secured put on the QQQ, made $112 by choosing a strike price of 516, and the market closed at 522.01. So you guys might be asking, hey, why did I not get these shares assigned if 522 is higher than 516? Cash secured puts is different than options, or for covered calls. For covered calls, when the strike price is more of like a bullish trend. So for covered call is more of a bullish trend, right? So for this 593, for a covered call, the market has to be going up and it has to be at 593 or higher for you to get assigned those shares, versus a cash secured put is the opposite. It's in a bearish market. So I would have technically needed the QQQ to be at 516 or below for me to get these shares assigned. So that means I would buy the 100 shares of SPY, or the 100 shares of QQQ from the investor that paid me that upfront premium. I'll dive into it more once we head over to Robinhood and we start looking at the different numbers. It'll make a little bit more sense in a spreadsheet. And the last leg of what I did for May 19th is I did a covered call against IWM. IWM, again, is the small caps for the Russell 2000. I bought these at the 208. So I had to choose a strike price of 209 so I didn't lose money. And ideally for IWM, I don't think I'm going to continue running covered call against IWM. I would rather just run a cash secured put or a covered call on Amazon stock or like NVIDIA stock. So either way, made $19 of premium. The strike price was 209. And I was hoping these IWM shares would get assigned today, but then it was super close. The market closed at the 208.97. So I was about 3 cents away. So option signed, no, but I did make $19. And for the total realized gain for May 19th, it was $473. 260 was just appreciation, and then the remaining is premium gain. So with that premium gain, I'm going to buy more shares of SPY. For the May 16th, $211 of premium, I'm going to buy more shares of SPY so I can continue running this snowball and making more money. And the way I look at it too is whenever I buy SPY at these lower prices, I'm going to assume that the SPY is going to continue going higher. So eventually when I have 100 shares of SPY, I would basically lock in a lot of appreciation as I'm waiting to buy my next 100 shares of SPY. So therefore, like when I actually start getting these, contracts assigned, I'm not necessarily going to be bummed out because I've already captured a ton of premium waiting for me to get the 100 shares of SPY. And then once they're at 100 shares, it doesn't matter at that point. I'm just going to wheel and deal to make that premium. So hopefully that makes sense to you guys. But now let's go over to the holistic overview of how these last, I think, 26 trading days have played out since April 11th. So let's go over and take a look. So this is my favorite thing to talk about, is tracking the progress of how this options trading has gone. So when I first started this options trading of covered calls and cash secured puts back on April 11th, the account was at about $86,312.66. But if we look forward to May 19th, the account is currently at $97,326.62. And for May 16th, like I said, we had the $211 premium day. And then for May 19th, which was today, or by the time you see this video yesterday, was $473. And so the way that I'm coming up with this 12.76% is that's just total return between options premium and then just appreciation. So from this 86,000 to this 97,000, it's about an increase of 12.76%. However, for this $8,353.53, this is premium gain and then also appreciation that I've realized. So this is realized gain right here for this $8,353.53. Looking at more hierarchy stats, the trade win percentage since April 11th is about 96.15%. I had 25 winning days and 1 losing day, and total of 26 days. If you look at the average premium per day, I'm making about $321.29 a day. And then for the average weekly premium, it's $1,392.26. I adjusted the monthly premium, so this is a little bit more accurate. I just took this 8,353 divided by 2, so that's the monthly premium. So we're currently at about $4,176.77 of monthly premium as an average. So what I did here with this average yearly premium is I estimated what potential returns might look like. I definitely think this might be a little bit too optimistic, and roast me in the comment section or not. I don't know if I'm going to necessarily hit this, but it would be kind of cool, wouldn't it? But the way I did this is I took just the weekly premium and multiplied it by 52 weeks in a year. And that's kind of how we came up with $72,397.26. And that's a premium of about 84%. I think that's very optimistic. If I can get something closer to like 25-30%, I think I'd be very content with that. However, we're already up 12.76%. So I don't know, it's hard to say. When I first started drafting up these calculations, I think if I made $29,740.24, I think that'd be about 30% gain, or maybe 35% gain. So that's kind of what I'm shooting for the end of the year. We're definitely on track. We have a lot of time left. Hopefully I don't mess this up. Okay, looking at the weekly tracker, guys, we've had 6 total weeks that went by. The last week was massive because of a huge appreciation gain. So we were at $4,163. And then for May 19th, we're already at $473. So we're off to a fantastic start. I usually want to average about $1,000 a week. So that would be quite nice. If we look at the monthly tracker, the first month when I started running these options, I made about $2,289.53. But then the May still has 9 trading days left. I'm already at $6,064. So this is going to be a monster month. I can't wait to see how it plays out these last 9 trading days, but hopefully it's more than the 6,000 and not less. And then for the yearly tracker, we already talked about it. We're at that $8,353.53. Let's go over to Robinhood and start talking about the plan for tomorrow, and then actually explaining how these options are working through the Robinhood console. All right, guys, let's talk about what I plan on doing for tomorrow. So the first thing I want to do is I'm planning on buying 200 shares of SPY. I have about $69,847 of cash on hand right now, and I'd be able to buy 100 shares clean and free, but then I think I'd have to take about $50,000 of margin to then buy the other 100 shares of SPY. And this is my thought process. To borrow about $50,000 of SPY is going to cost me about $8 a day. As long as I can make more than $8 a day in premium from the 100 shares of SPY, I think it's a good idea. But if the market turns in the opposite direction, I can potentially lose money. I can get less and less premium as it continues to get further away from my cost average. And then for me to not lose money, I'd have to choose a strike price at my cost average. So in the case that market goes back up, I don't realize a loss. That's kind of how I had my loss on April 22nd. Similar story, but I'm willing to give it another shot. So initially I want to buy those 200 shares of SPY. So I have a ton of buying power available. So I want to tap in a little bit. And I think $50,000 is like, I don't know, 20% of the buying power, maybe less. I'm just kind of making up a number right now. And then with that being said, I also plan on running one QQQ cash secured put. So I need about almost $52,000 of collateral. And then I'm going to just run a covered call contract on the IWM. I think for IWM, instead of running a daily, I'm just going to run a weekly that goes out until Friday and just try to rack in a little bit more premium, because I think making, $15, $20 a day isn't necessarily worth it. So I think I'm just going to go a little further out in the amount of days so I can just lock in a higher premium. And then hopefully throughout the week, IWM gets up to 209 strike price, and then I can get them assigned and taken away from me so I can free up a little bit more cash to find a stock that's a little bit more, that can get a little bit more premium from compared to IWM. All right, that's kind of what the plan is. So let's start looking at what the numbers would look like. Okay, so let's go over to my favorite button of all time, the trade SPY options. You press this button, money shows up in your account. It's crazy. And for this, now that we're at the SPY options builder, do not press this buy call. That means that you as an investor are paying the upfront premium to then run these options. I just like running covered calls and cash secured puts. To run a covered call, sell, call. To run a cash secured put, sell, put. And personally for me, I like to run daily options contracts for the SPY QQQ because it allows me the flexibility to adjust as the market is adjusting. So if the market is shooting up, I'd be able to choose a different strike price on the day instead of just hoping and praying it doesn't get assigned at the end of the week. So just something to consider for your strategy. I just like running dailies. And somebody asked me what type of deltas I'm choosing. I think if I usually start looking about $5 away from the at the money price. So this $592.90, that's the at the money price for the SPY. And so initially I look at $5 away. So that's $597. If I can get $355 for a $597 strike price, I'm going to do it. And I'm actually, well, I don't have the 100 shares. Dang it, I can't put it in. All right. Either way, let's pretend like we're going to, there's a 62% chance of this hitting. So the way that a delta works is when you see this 0.62, that means there's like a 62.76% chance this is actually going to execute. The lower it is, the less chance it's going to execute. The higher this is, the more likely it's going to execute. And the higher this is, the higher the premium is going to be. So let's, oh, this is a cash secured put. Okay, so let's go to covered call, $592.90, $7 away. Yeah, so this 597 is going to be a 30% chance of hitting. What was the number? Yeah, so for tomorrow, I'll probably choose something at this 597 once I buy my 100 shares. So, all right, guys. So I'm going to, for the 200 shares of SPY, I'm going to buy 100 shares. I'm going to choose like $5 away from the strike at the money price of this 592.70. And the other 100 shares of SPY, I'm going to choose something a little bit closer to the strike price. So I might choose something like 594, so maybe $2 away from that at the money, maybe $3 away, so I can rack in a little bit more premium. So that's gonna be the thought process. One contract of SPY, choosing $5 away, so I can capture some appreciation and also capture a little bit of premium. And then other 100 shares of SPY, I'm just gonna choose something a little closer to at the money, maybe $2 or $3 away, lock in more premium, and then there's probably a higher likelihood of these shares getting assigned, but I'll take that little bit of appreciation plus premium. So just kind of coming up with like a little bit of a hybrid strategy, see which ones I like better. Do I like maybe holding on to the shares longer and choosing further out of the money strike prices, or choose something closer to at the money, make more premium, and then more turnover between buying shares, getting shares assigned, buying shares, getting shares assigned. So we'll kind of see how it plays out. So I think I want to test 100 shares doing $5 away, and then 100 shares somewhere between $2 or $3 away. Or if somebody wants to look at delta, like a 50% chance of the contract executing. Okie dokie. So that's kind of what I plan on doing for SPY. So let's talk about how a covered call works. So let's say, for example, we're going to choose this 597, right? We have this clicked. I don't have the 100 shares, so it's not really going to let me execute. It's not going to let me execute. So this is what's going to happen. So you need to own 100 shares of the underlying to run this options contract, 100 shares, one contract. So an investor is going to pay you $73 for the ability to sell your shares, my shares, at the 597. And this is basically an agreement. They pay the premium, and then you say that if the market gets to 597, you are going to sell those shares at the end of the market close. So there's a couple of things that can happen here. The first one being, investor pays you that $73, and the share price never goes anywhere near this 597. It stays at 592.70. It's 595. Basically, the way that you would get your shares assigned away from you is that the market, the SPY, has to be at 597 even or higher. So that's for a covered call. You have to be even or higher for a covered call. The other, so first scenario, investor paid you that money, didn't get near that 597. You keep that premium, you keep your shares, you rinse and repeat the next day. Don't need to do anything special. The other thing that can happen is the market is pretty hot. The SPY goes above 597. Let's say, for example, it hits that $600 mark. So you basically locked in selling your shares at this 597. The investor paid you that $73 of premium. You sold your shares at this 597. You also made about $500 appreciation from this 592 to this 597. So you made $500 appreciation, maybe $430 appreciation plus this $73. But the one downside of having your shares assigned during a covered call is you basically miss out on an additional $300 of premium, right? So basically you miss out from this $597 to $600 of premium because you traded that opportunity to lock in an investor paying you an upfront premium. So you miss out this appreciation for premium. That's that trade-off. So now let's talk about cash secured put. So cash secured put is different than what we were talking about earlier, or the covered call. The way that a cash secured put works is, let's see, I usually start choosing something $5 away. So let's look at 587. That's premium kind of low. 10%. I like to choose maybe a delta that's a 30. So it's like a 30% chance of it hitting. So what is this? 589 look like? 16. Ooh, it's a little too close for my liking. But let's maybe choose this. Let's be aggressive and choose this 591 strike price for this cash secured put. So there's two ways that this plays out. The first one being no assignment. So investor pays you that upfront premium of $87 for you to buy that investor shares at the 591. If the market goes down, say it doesn't go down, stays at this 592.81, you keep the premium. The only thing you needed to bring to the table was collateral. So you needed to bring about $59,100 of collateral for you to run this cash secured put. So that's either margin or that's cash. Second scenario is the market blows way below this 591 strike price that you chose. Investor paid you that premium. You chose the 591. The market goes down to 581. So basically, from where you locked in your shares, you basically lost $1,000 of appreciation. So that's the one negative thing for running a cash secured put is you don't know how the market's going to react. It might go down, and then when it goes down, you basically locked in your shares at such a high price that running a covered calls against it, now that you own them, the premiums are going to be extremely low if you're not going to choose something that's closer to at the money at this 581, but then you risk selling or getting your shares assigned at a price that is far below your cost basis. So then you would realize the loss. So that's something to look out for. Ideally, you would choose a strike price that's kind of close to at the money. Once the cash secured put is assigned, you just sell at the money so that you can offload the shares. That's kind of the thought process. That's kind of the downside of cash secured puts is the market continue to go down further. But then the other thing is once you have the shares assigned, as long as you're not on margin, you can just wait for the market to go back up. So then you don't have to worry about it. So that's the one thing that I like more than high income ETFs is no matter what high income ETFs, you're going to always have NAV erosion versus for like SPY or like QQQ, you can just wait for it to go back up because eventually the stock market is always going to go back up. Those are just my 2 cents. For QQQ, so for the SPY cash secured put, I don't really plan on doing a cash secured put, just running those calls. Like I said, 100 shares is going to be about $5 away, maybe like a 15 or 0.15 delta. And then the other 100 shares of SPY is going to be a little closer to the money, like a 30-40 delta. All right, and then for QQQ, let's take a look real quick to see what that looks like. I'm going to run a cash secured put on that. Trade QQQ option, sell put, make sure it's for tomorrow, May 20th. QQQ is at 519, so let's lock in maybe $100, maybe $81. Choose this 517, lock that in. I will actually lock that in. Wish I made $8,000. All right, review the order. Basically, what's saying you need about $51,700 of collateral to run this specific cash secured put. So let's submit. It's in. So when the market opens tomorrow, hopefully it gets filled. I make that $80 something of cash and move on with my life. Cool. And so I'll probably choose, what is that delta? About 20 delta. So a 21% chance of this hitting. I'll take those odds. I'll take that $80 any day. And then for IWM, let me set that up. For IWM trade options, if it is $73 for this 209, maybe I'll try this daily again. If when the market opens tomorrow, or IWM opens tomorrow, and it's nowhere near this $73, I'm just going to run a weekly. But as of right now, I'll just I'll try to run a daily again if it's $73. Yeah, guys, that's what I plan on doing for tomorrow. Hopefully that made a little bit more sense how covered calls work, cash secured puts work. Let me know what you guys want to know more in the comment section. Matt out, and I'll see you in the next video.